Good morning, everyone. Good morning, everyone. Thank you for joining us today. It's a pleasure to welcome you to this webinar, marking the launch of the World Bank's new report on the impact of COVID-19 on global value chains and its implications for development. Shortly, I will invite Marila Maliszewska and Paul Brenton to present the main findings of the report, which they co-authored with Michael Ferrentino, who recently retired from the bank. After that, we have a fantastic panel to discuss the findings and implications of the report. We are joined today by Mari Pangestu, Managing Director for Development Policy and Partnerships at the World Bank, Susan Lund, Vice President of Economics and Private Sector Development at IFC, Chad Baum, Senior Fellow at the Peterson Institute here in Washington, D.C., and Shakib Qureshi, a Senior Executive at Business Intelligence Limited in Bangladesh. A really nice panel of think tank, private sector, and bank. This is a timely and important report. In the immediate aftermath of the COVID-19 outbreak, as countries globally imposed lockdowns and closed borders, they put strain on international supply chains. Global trade fell by 8% in 2020, the sharpest decline since the 2008 crisis. This pain was felt acutely by low and middle-income countries, which relied on trade for access to essential goods. Critical shortages of ventilators and PPE fueled debates about reshoring. As the dust settles, it's becoming increasingly clear that GVCs not only weathered the storm, but they remain at the heart of the trade-led post-COVID-19 economic recovery. An important finding from the report is that countries well integrated into GVCs recovered more quickly than others, and that well-operating GVCs are a source of resilience far more than they are likely a source of vulnerability. This is not to say that the questions about the future of value chains have been settled. There are clear policy priorities for enhancing resilience of value chains, especially for developing countries. The global policy response to climate change also posed challenges for many countries integrated in carbon-intensive GVCs. And technology is likely to have an impact on the functioning of GVCs. This report provides the analytical basis for such conversations, outlining policy priorities for developing countries, and will prove invaluable to policymakers everywhere. Let me now invite Marila and Paul to present the report. Marila and Paul, over to you.
Thank you very much, Mona, and good morning, good afternoon to everybody, and thanks very much for this opportunity to present this report on global value chains and how they've been impacted and have affected the impact of COVID-19, but then also other factors that are shaping the global economy, such as efforts to reshore production and policy responses to climate change. Let's start by saying what are global value chains and why they're important. Global value chains arise when production of a good or services is split up into different activities, which are then located in different countries around the world. And that has proven to be an important way, the growth of GVCs has been an important way for developing countries to participate more fully in global trade. If you go to the next slide, please, we can see that as global value chains have driven the participation of low and middle income countries in global trade, the red line on the graph, over the last 30 years, the share of those countries in global trade has doubled from around 15 to 30%. At the same time, the share of people living in extreme poverty has rapidly declined from over 35% to less than 10%. And it's no coincidence that those two have occurred at the same time. Global value chains driven trade has been a key element of growth and poverty reduction in developing countries. But how has COVID affected global value chains, and have global value chains affected the impact of COVID? That's an issue that we've looked at in this volume, because there are reasons to think that global value chains may propagate a shock For example, if critical inputs are being produced in a location that is in a lockdown, that'll affect other stages of the value chain. If we can move to the next slide, please, which just shows in the upper level how big a shock was experienced in 2020. GDP fell by 4%, which is considerably larger shock than in the previous large crisis of 2009. And trade also collapsed by 8.3%, a substantial and significant drop in trade. But if we look at the bottom figure, we can see that shock, it was a very sharp, but also a short shock. And trade has recovered pretty rapidly in months, in the rest of the months of 2020. But also that shock was much harder for services, and goods trade recovered much more quickly. And the services is particularly driven by transport and tourism. So we do see that there was a substantial shock, and to what extent has that impacted GVCs, and how did GVCs respond to the shock? If we go to the next slide, please. So whilst there are reasons to believe that GVCs can propagate shocks, there's also factors that might lead them to mitigate the impact of shocks. For example, when there's a domestic lockdown, being linked to foreign markets for demand and for your inputs can mitigate the impact of a domestic lockdown. And there are also reasons to believe why GVCs may be resilient. And this figure suggests that indeed GVCs were a source of resilience during the shock. The blue line shows the extent to which changes in the volume of trade explained the overall shock. And the other line shows the extent to which the breaking of trade relationships explained trade movements. So what we see is that it's changes in volumes of existing trade flows that primarily explain the response to COVID. And this suggests that GVCs sought to maintain trade relationships rather than break them. And this then paved the way for a very strong recovery. And there are factors, GVCs, there are costs in setting up GVCs in terms of finding appropriate suppliers, in training and understanding markets, etc., to believe that firms will invest and seek to maintain those investments even during the shock. And that seems to be clearly what happened during COVID, that GVCs were a source of resilience and have then paved the way for a strong recovery. But the situation is slightly, this is the overall picture at the global level. The picture is slightly different for developing countries, where we see much more prevalence of broken trade relationships during COVID. And the apparel sector is perhaps a good example, where buyers in Western countries cancelled contracts with no notice, which then severely impacted producers in developing countries such as Bangladesh and Vietnam, where factories had to shut down and workers were laid off. But overall, we find that the GVCs were a source of resilience. If you go to the next slide, we can just see how that materialized for Cambodia, where the figure shows the extent to which firms engaged in trade survived both before and during the crisis. And we see a much higher survival rates for firms that are integrated into GVCs than for firms that were not. So overall, we find sources of resilience for firms. There are particular challenges for developing countries, and in particular, there are issues around their dependence on product value chains where production is concentrated in a few countries, particularly vaccines, medicines, etc. So for developing countries, diversifying their exports, investing more in reducing trade costs are ways in which they can integrate greater, more effectively into GVCs moving forward. So with that sort of short review of the impact of COVID, the rest of the report looks in a little more detail at some of the other factors that are shaping GVCs in the global economy, and in particular, efforts to reshore production and climate change policies. And with that, I'll pass to Marilla, who's going to explain those results. Thank you.
Thank you, Paul. Good morning, everyone. Next slide, please. So as Paul mentioned, supply chain disruption caused by COVID shock prompted calls for reshoring of key manufactured goods by advanced economies. We were wondering what that means for developing countries. We cannot predict the future, but we can think through the consequences of different scenarios. And this is exactly what we do with the help of a global computable joint review model simulations. So we think about three scenarios. Scenario one, high-income countries and China reshore their production. They do it through subsidizing domestic production and putting up barriers to imports. And what we see in this chart in the blue bar is the impact on their income of different regions if the leading economies, high-income countries and China, decide to subsidize domestic production. The orange bar shows what happens if developing countries decide to also reshore their own production and pursue the same policy. Everyone ends up worse off. Then the gray bar shows what happens if instead developing countries, instead of responding in kind by reshoring their own production, they decide to lower the cost of trade and remain open and eliminate tariffs on intermediate inputs, making it easier for them to get more integrated into global value chains. And they are better off. Their incomes grow faster, they trade increases by 25% between 2019 and 2030, versus when they decide to close their economies, they would have decreased their trade by 22%. So what we find that overall, both developed and developing countries are better off if they continue with an open trade regime. Next slide, please. And what we also find that trade and poverty reduction are closely linked. So again, looking at those three scenarios, what we find that a more hostile environment for trade with a shift toward global reshoring could drive an additional 52 million people into extreme poverty. And what we find that Sub-Saharan Africa would be hit the hardest, with 80% of the new poor coming from the region. On the other hand, measures to enhance trade and not only boost incomes and spur growth of global value chains, but they also contribute to poverty reduction. And they could lift additional 22 million people out of poverty by 2030. Interestingly, what we also find is that such measures would also improve the incomes of the bottom 40% of the global population. Next slide, please. Finally, what about other future shocks? Here, what we focus on is on the climate change mitigation policies, which could fundamentally reshape global value chains to a far greater extent that the transitory shock as COVID has done. The impact of GVCs is already on GVCs of climate change, both itself climate change and the mitigation policies already apparent, as firms reshore vulnerabilities in production centers and governments adjust climate policies to reach their commitments under the Paris Climate Agreement. Both countries and regions heavily reliant on fossil fuels will see the greatest adjustment as climate mitigation measures reshape global value chains away from carbon-intensive activities. And what you see here is the sectors that could potentially be hit the hardest and those that could potentially gain when the production shifts away from carbon-intensive products. So of course, products such as fossil fuels and those that use those products intensively could be hit the hardest. However, there will be new opportunities in sectors that are relatively low carbon intensive. So there are opportunities for developing country exporters that specialize in low carbon sectors, such as computers, electronics, motor vehicles, other light manufacturing, which could become even more deeply integrated into global value chains. Now you would ask, okay, that sounds great, but what needs to happen for them to be able to realize those gains? And a little bit more on the policy side on the next slide, please. So what we want to emphasize is that global value chains can help drive green, resilient, and inclusive recovery. Let us unpack each outcome in turn. Green. So trade can support sustainable supply chains and transition away from carbon-intensive sectors. Lowering tariff and non-tariff barriers on imports that embody new technologies can drive productivity growth and adaptation. Implementing ambitious NDCs, the climate change mitigation goals, to achieve climate goals can help countries exploit these new opportunities in low carbon intensive products. Also, the global community has a role to play. It can help developing countries adopt climate-smart agriculture and build capacity for trade facilitation reforms. Mutual recognition agreements covering environmental goods can help developing countries meet the regulatory requirements of developed countries, cutting time and cost to trade. What about resilient? So low and middle countries can take steps to strengthen their resilience to future shocks by unilaterally taking a number of measures. For example, during COVID-19, many countries restricted exports of food and medical supplies, including vaccines. However, maintaining open trade during crisis increases resiliency. Appropriate policies include improving border procedures and easing impediments to trade flows. Resilience can also be strengthened by sharing information on stockpiles of food, medicine, and other essential products. More information is needed also to understand how the GVCs are constructed and where lower tier suppliers can be found when countries need to quickly diversify their sources of inputs. Finally, access to finance is important for the most vulnerable traders if contracts are suddenly canceled or borders are suddenly closed. In terms of how the GVCs can help drive inclusive recovery, we know that trade can support growth and poverty reduction, but more can be done to spread the benefits of trade more widely. What we find that the steps to boost trade and incomes can advance World Bank twin goals of reducing poverty and boosting trade prosperity. So overall, with the right trade and environmental policies in place, and also a host of complementary policies, the GVCs can continue to build resilience and drive poverty reduction in a sustainable way. Thank you.
Thank you very much, Paul and Marilla. There are many things to unpack in this report. It provides evidence for some of the larger trends that were already becoming clear, like the role of GVCs in the trade recovery. The results from the economic modeling clearly show that reshoring will exacerbate economic hardship for some of the most vulnerable countries, but it will also hurt countries that are imposing tariffs and subsidies to discourage international trade. Let me add, though, that reshoring can also happen for business reasons and without being driven by government policy, and we will need to differentiate when that happens, either for business reasons, because of changes in technology and so on, just to keep that in mind. So let me start by asking Mari. Mari, as we reflect on the impact of the COVID-19 pandemic on global trade and GVCs, how can we make developing countries more resilient to future shocks?
Thank you, Mona, and congratulations on this excellent report that I think lays out the issues, but also provides the evidence base for some of the things that we know is not the right thing to do. Like you're finding that reshoring is not the answer, and that it actually leads to the country to worsening outcomes as well as increased poverty. So I think when we look at the effect of the COVID on trade, we see that trade recovered fairly quickly, but just like the income recovery, it's been uneven. And the drivers of the unevenness is actually related to how integrated you are to the world economy and whether you're part of a global value chain or not. So it's reinforcing the resilience part of the debate about global value chains. So, I mean, this report shows that actually, if you are part of a global value chain and the more integrated you are to the world economy, you are more resilient to weather the shock, right? So, I think the issue of global value chains being more resilient is making you more resilient as a country, and also the companies involved. Is, I think, the big question that we want to be addressing and see, how do you have developing countries? What are the policies that developing countries need to have there? And we also need to bear in mind that what's going to be the response by countries or by companies. And I think at the end of the day, it is going to still be diversification. And I sort of remember another report that you did around Fukushima. After the Fukushima disaster, what happened was that the Japanese companies, because they had been reliant on one particular component or a few components that were based there, and then everything shut down because of the component not being produced, they diversified, right? That's the response. So diversification means opportunities for developing countries that are not yet part of the value chain. Second, you talked about reshoring, but how about nearshoring? Because I think the latest Trade Watch actually shows that maybe regional value chains will also evolve because of this supply chain disruptions, because of the shipping. You want to have maybe not just the lowest cost, but also the nearest supply as well, right? So these are trends that I think developing countries should bear in mind. So I think to be able to weather the shock better and be more resilient, I would just say 4 things. One is, which all of you mentioned already, reducing the cost of trade is still key. And you can start with the very basic, reduce the border complexities of goods flowing in and out, because being part of the global value chain means you want to have flow of goods, services, and people be facilitated as much as possible. And to export, you need to import. You want to have global value chain, you can't have the whole supply chain in your country. So don't go the local content way or providing subsidies or incentives to go that way. Reduce the cost of trade, trade facilitation, border measures, non-tariff measures, relax the rules of origins and so on, and the logistics aspect, the infrastructure aspect. Second, integrating with the world economy, for me, is still very key. And whether it's making sure you have a predictable and rules-based multilateral trading system, we can have a very long discussion on that. I think Chad is going to be interested in that discussion. But there is also regional integration initiatives going on, whether it's the RCEP, whether it's CPTPP, or whether it's what's happening in Africa. These are also important. Third, I think you mentioned technology, the role of the technology shock. Which will be, services and flows of people and so on will be a key part with technology. Or maybe actually the flows of people become less of an issue because you can do everything digitally. And that's why the pandemic has been important for that. So the functioning of the GVCs will need to address that. And services, I think, sector and what you do to make sure that you have a competitive services sector is going to be key. Because another thing about the recovery in trade was that the services recovered, the tourism and travel still collapsed, but the modern services like digital-based and telecom-based and financial services-based actually much improved. And finally, the other things that countries have to be anticipating is you have to be, if you want to be part of the global value chain now, you have to be also be part of a sustainable supply chain. And it's across the whole supply chain, starting from the energy source that to be used for your production. So the transition from fossil to renewable energy, for instance, becomes a competitiveness issue, not just a climate and development issue, but a competitiveness issue. And this will be increasingly the pressure. We can see what happened in Turkey. They finally ratified the Paris Agreement, and now we're working with Turkey to work with them on their long-term low-carbon development strategy. Why? Because most of their exports are going to Europe, and they were potentially facing CBAM, right? So it was a real competitiveness issue for them. And so this is opportunities that will arise if countries can also change their policies to have a low carbon development pathway forward. And it's about the energy use. It's about many things that they need to do, being able to track across the supply chain. And I think you mentioned it, being able to import and export environmental goods and services to also help them with the climate impact. Okay, I'll stop there. I may have overrun my 5-minute quota, but hopefully that's a good kickoff for the rest of your discussion.
Thank you very much, Mari, and very insightful as always. Next, Susan, Firms in developing countries were especially vulnerable to the COVID-19 shock. They were not able to easily shift to remote working or use more automation. What's the IFC doing to assess developing countries in enhancing resilience to these shocks?
Well, thank you, and thank you for having me. You're right that emerging markets and developing countries were particularly hard hit during the pandemic through the trade channel. First of all, as this wonderful report, which is very rich, it has a lot of insights and great material has shown, trade overall bounced back, but many emerging markets found themselves at the wrong end of global value chains. So because of reductions in demand in advanced economies, we saw factories in many emerging markets from Bangladesh to Myanmar to Vietnam laying off thousands of workers because suddenly demand dried up. Secondly, we also saw a lot of protectionist measures put on by countries around the world, particularly around medical equipment and supplies. And this limited the access of low and middle income countries, of course, to essential things like vaccines and medical supplies, which we see still today as one of the factors in why we're seeing resurgence of the pandemic around the world and why we haven't gotten out of it, even 2 years later. So during this time, we've been working at the IFC and with our partners across the World Bank Group on several fronts to help provide liquidity to companies. First, we launched the $8 billion facility called the Fast Track COVID-19 facility. And that's mainly to provide short-term finance to companies who are our clients. So it was launched in March of 2020, and just 9 months later, by the end of January, about a year and 3 months later, by the end of this January, we'd committed $6.3 billion of that. And 43% of that went to the very poorest countries and to those fragile and conflict nations. So stepping up trade finance was a very key part of this. Suddenly, companies that were engaging in global trade found their access to the credits needed to participate in trade dry up. And so the trade facility component of this has been incredibly important. In addition, we launched a $4 billion global health platform, which is investing in companies to increase the supply of critical goods like masks, medical equipment, and services in developing countries around the world. And so this is responding to those restrictive measures that we saw the advanced economies put on. So we're still in a period where there's really a lot of demand for liquidity. It's hard to have an event and a day like today without mentioning the conflict in Ukraine and Russia. And that is going to have additional ripple effects around the world. For instance, we know that Russia and Ukraine together are 25% of global wheat exports. And so there are many countries across North Africa and Africa where they are the major wheat supplier. So we'll see food prices soar, but also agribusiness manufacturing companies and food processors being hit. We see that tourism from Russia and Ukraine is a major source of revenue for countries as diverse as Egypt and Turkey and Sri Lanka, and already you're starting to see the impact. Foreign direct investment will dry up in some countries, particularly in the oil and gas sector. So we live in a very uncertain world, and we've seen lots of geopolitical unrest. So even as the pandemic ebbs, the need for these sort of short-term liquidity facilities to enable companies to continue and weather these types of shocks, we think is going to continue.
Thank you very much, Susan. And clearly the IFC is playing an important role at this difficult time. Chad, what have we learned regarding developing countries' access to essential goods such as medicine and medical equipment during a crisis? And what steps should the global community take to ensure better outcomes in future crises?
So thanks, Mona, and thanks for to the team for the invitation to be with you today, and congratulations to everybody, Paul and the entire team for putting it together. To be honest, I got it late last night, so I have not had a chance. It's a long report, and as in true World Bank fashion, it's in great detail and a lot of empirical analysis, so I look forward to reading it. but my remarks are going to be sort of complementary and sort of at the edges of things that I've noticed during the crisis. So, I think to kind of in a roundabout way address your question, I don't think obviously GVCs are going to disappear anytime soon, but I do think they are going to change because of this experience. And we've heard some of the stories already. It's bigger high-income countries are implementing policies. Some of it's industrial policy. So some of it's going to be attempts at reshoring. But some of it is just essentially trying to diversify away some of the geographic specific risk that we saw out there. And I think we have to recognize that. And so we've talked about, yes, countries should diversify, but I think we also need to recognize that heading into the pandemic and even now, in certain products, there's just kind of an excessive geographic concentration of production and export. And strip away geopolitical risk. We've now seen with the pandemic and climate and other kinds of natural disasters that we need to do better. But doing better is going to require policy, because we sort of were at that equilibrium because of economic forces and open markets. And if we need to agree globally that we need to diversify, then we're going to have to agree to do things differently. And I haven't heard a whole lot of conversation at the cooperative international level yet about how we're going to do that. And so, for example, if we think about, sort of whether it's excessive concentration of personal protective equipment in China, as we saw early in the pandemic, or, not medical goods related, except as an input for semiconductors and high-end semiconductors being excessively concentrated in, say, Taiwan and South Korea. Or vaccine production being excessively concentrated in the US, Europe, India, and China. We need policies to change that diversification. Now, it doesn't necessarily need to be reshoring, but if we deny it and we don't engage on it internationally, then that may be the only option that the rich countries end up with. And we could then end up in a very bad state. In any case, that's sort of my first point. Second point on, sort of this question of what can developing countries do in GVCs during a crisis, like we have just seen in weather, to potentially do better. And I would make maybe two recommendations, but based on one important key component, which is to know your supply chain, know what it is that you manufacture, know who you send it to, and know where you're buying your inputs from. So sort of, your vulnerabilities and who you are potentially vulnerable to. So why is that important? Well, when a pandemic hits and we've got all these kinds of shocks, there's certain products in which there's going to be a major increase in demand, whether it's PPE or vaccines. And if you're a critical input supplier in those industries, there's going to be a massive positive demand shock for the stuff coming out of your country. This is an opportunity for you to help, right? To engage, to make sure that all of the downstream buyers of your products know that you're reliable and that know that you're going to be expanding production and helping out and keeping, exports open every way that you possibly can. So it's not just sitting there, but it's actually proactively engaging. And we didn't see that nearly enough, right? I think quickly, whether it was PPE or certainly in vaccines, we've seen shortages of critical inputs. And that's a lack of positive engagement by governments in supply chains to expand productive capacity. And I think that's ultimately hurt production as well. But on the more defensive side, there's also a really important thing to know about knowing your supply chain to be able to protect yourself. And so let me give you three examples where relatively small countries, admittedly rich countries, but small countries, heavily embedded in cross-border supply chains, managed to stand up for themselves and reverse the protectionist policies that Susan was talking about. So one, when the European, and I'm glad I'm no longer at the World Bank, so I can call out specific countries and not have to worry about getting chastised about it. Very early in the pandemic, in March of 2020, the European Union implemented export controls on PPE. And this was largely designed to get the member states to re-allow the flow of PPE between each other. But Switzerland's not a member of the EU, right? And so, but they make vital components. by standing up and saying, hey, if you cut off our access to your output, you may lose access to some of those inputs. You're not going to be able to make anything at all. They were able to force the EU to rewrite the export controls regulations to protect themselves. Same thing happened when the United States imposed export controls on PPE in April. Canada and Mexico, heavily exposed because, as part of the North American region, a lot of stuff coming out of the US goes to hospital workers in those countries. Well, Canada essentially stood up for itself and says, look, that the fiber and pulp that you need to make all of these, surgical masks and hospital gowns and things like that comes out of our plants in British Columbia. You don't want to lose access to those because you're not going to be able to make these things yourself, right? And then finally on vaccines, when the European Union was threatening to cut off the UK over this fight with AstraZeneca in early 2021, they quickly realized they couldn't because the UK was a massive provider of these lipid nanoparticles that are the essential ingredient going into the Pfizer, the Moderna mRNA vaccines, and they were reliant. So in any case, knowing your supply chain, knowing that you can use it to protect yourself can actually help you keep markets open. And I don't think enough countries took advantage of that knowledge to ward off the possibility that countries might engage in some of these protective measures and stand up for themselves. Knowledge is key.
Thank you, Chad, and always on the provocative side, but you really raised very, very important points. And I think we need to come back to some of the issues you raised. It's true that maybe Switzerland and Canada and Mexico stood up for themselves to push away some of the protectionist measures arising during the crisis. But I hope in the more medium term, we don't go down the way to back to some import substitution over time, where countries decide to just again be producing everything on their own, and going back to the inefficiencies of that model, of course. So something to look forward to avoiding. So last question on the first round is for Shakib. The apparel sector in countries such as Bangladesh was hard hit when buyers in Western countries suddenly canceled contracts as shutdowns took effect in major consumer markets. What was the impact of such cancellations on firms and workers in Bangladesh, and what can be done to promote more resilient trade relationships in such sectors? Over to you, Shakib.
Thank you very much for having me. I will not be very elaborate on the statistics, but I need to mention that there was like 19% less of export earning for the RMG products from Bangladesh compared to 2019 and 2020. Similarly for imports, well, it is difficult to figure out the import volume of all the components of textile and apparel industries. But if we look at only the cotton, which is for 2-digit HS52, the import figure was 5.8 billion in 2019 and only, well, about 16% less, 4.9 billion in 2020. So we see the trade volume both for export and import was decreased, and this is much higher than the global average of 8.3%. It was 19 and 16% reduction. And supply glitch started very early. As of end of February 2019, when it was mostly China that was largely affected. And even at that time, Bangladesh faced supply glitches for import of raw materials. At that time, I was visiting the main port for some other reason, and the port official reported that it was operating at about 50% less than the usual capacity, unloading capacity for import cargo compared to that time of the year. And since many enterprises, many factories didn't get the supply in time, they were already fearing that they will not be able to produce and ship it to the buyer in time. So that started in later months the cancellation of the orders. So it will not be very fair to say that it was only the retailers and wholesalers in the North America and European Union who were responsible for canceling. There was some supply glitch earlier, which started this chain reaction of canceled orders because the production was not completed on time. And of course, when there was large scale lockdowns and closure of all the shops and malls in the importing countries, the retailers and wholesalers feared loss of business and canceled orders. Unfortunately, some orders that were already shipped reached the destination or already in the process of shipment or in the production process, they were canceled too. The orders were canceled too. According to one estimate by the Apparel Sector Association, it was some 3.16 billion worth of shipments that was canceled from the international buyers. So, and it resulted in job losses. The exact estimate of the number of workers who lost jobs or laid off is not available, but there have been some estimates. Suffice it to say that at least there was one survey. There was job loss, and of course there was irregular pay or non-payment of wages. There was one survey by one university, and as of August 2019, it mentioned that 47% of workers, apparel workers, didn't get paid, or at least they had some arrear wages not paid by the employers. And the government announced stimulus package for recovering the economy. The whole package was about $11.2 billion worth, out of which $595 million was earmarked for RMG, like apparel workers and SMEs. It was only for their meeting their salaries and wages, not for production. And it was used, and the workers got benefited. But the enterprises say that it was not adequate because their monthly requirement is some $470 million worth if they calculate it at the level of minimum wage. But even then, it was some help from the government. And we can think of some policy recommendations that in Bangladesh specifically, we do not have any social safety net measures for the workers, especially the private sector workers. And the government has been keen on introducing some measures, but we have not started yet. So there is no pension, no unemployment insurance, and no provision for emergency cash support. And about the global value chain thing, the obligation of buyers and sellers, like if we cite that example of cancelled orders, if we review the Incoterms which define the obligations of buyers and sellers in any cross-border exchange, then those terms may need to be reviewed. That is, obligations of buyers and sellers. And another thing, traditionally, the apparel exporters would receive their payment through letters of credit. And the payment was done from the banks once the shipment was in place. But there has been increasing tendency to avoid the letters of credit as a payment instrument, and some other instruments are being practiced by most enterprises and most retailers and buyers. So the letters of credit would bear some kind of will cover some kind of risk in case of non-payment or in case of sudden cancellation of orders. So the going back to letters of credit as an instrument of payment is recommended. And for meeting future shocks like that, someone mentioned Mari, I guess, that the recent Ukraine-Russia crisis is sending shockwaves for some specific commodities like wheat, sunflower oil, and of course, gas. Countries maintain buffer stock for essentials like food grains and petroleum for 2-3 months to fight off any such supply shocks. Since Bangladesh is largely dependent on these apparel products, some critical raw materials like cotton or yarn or major fabrics, the enterprises can have a buffer stock for like 2-3 months. One single enterprise may not be able to do that, but if they can do it through the association. But for that, some policy measures or regulatory measures need to be reformed from the government. And that's about it. Thank you. And for the climate change,
Shakib, I will leave that climate change question for the second.
Okay,
yes,
okay, that's fine.
you.
Okay, I'm over to you.
All right. Thank you, Shakib. So back to Mari. I know we're running out of time, but we have a few more questions, and we did start a little bit late, so apologies everyone for that. Mari, the recovery from COVID-19 has been driven by trade. How can we ensure that the gains from trade are equally shared and that trade contributes to building more inclusive economies? You already talked about building more sustainable economies through trade, but how about inclusive economies? Thank you, Mari.
Thank you, Mona. And obviously, this is a question we have been asking for a long time. And when I was trade minister, I used to say, I'm not the trade minister, I'm the trade and development minister, because we should always see how trade is a means to development, which includes making sure that the distribution of the gains from trade is equally, as much as possible, equally distributed. But I think we have not been able to be successful in delivering on that. I think there was a figure in the slide that showed trade has contributed to poverty reduction. So in that sense, it's been positive, but the outcome on distribution, I think, is still something that is not conclusive. And your previous report on trade and distribution effects is showing that in many instances, the negative distribution effects can be sectoral and can be regional, and can have long-lasting impacts. And there were Bangladesh, Sri Lanka as examples. And the main issue was not the trade aspect, but the lack of complementary policies to ensure that you can address the distribution impact. So we need to focus on what are the complementary policies that can make sure that the gains from trade are going to be widely distributed so that trade is inclusive. And if I recall correctly, like labor rigidities, labor policy rigidities, labor mobility was one issue that tended to have this rather concentrated sectoral and regional impact. And then you still have the traditional connectivity and integration within your own country so that you can have the spillover effects be more widely spread. And now if you add the sustainability component to it, you also want to make sure that the integration through the infrastructure is done with sustainable infrastructure, for instance. And then you have the whole range of policies, which is going to be really more challenging now with the scarring of the human capital, the learning losses we have experienced in not just with children, but with youth and adolescents. Not working for 2 years can lead to a lot of skill loss. So there's a lot of upgrading of skills and human capital that's going to be needed. If as trade recovers and you create jobs, you want as many of these people to be employed. So I think there's a big agenda on the human capital side to increase skills and so on. And so countries need to make sure that they address the complementary, have the right set of complementary policies. And I think we have learning from experience, learning from other countries kind of a program that we can share with many others. And I would say this is key. Without that being addressed, you are going to see already the increased protectionism that had happened before the pandemic. And trade ministers and policymakers and heads of state also get cold feet when they are being asked to do more, to open up and so on. And you will see this kind of more nationalistic reactions coming in. And let me just comment one more thing to make sure that I just want to comment on what Chad was saying, the need for global cooperation as well, because a lot of these restrictions that happen with vaccines and potentially it happened with food, but it was not that bad compared to 2008 at the beginning of the pandemic, but it can get worse again now in the aftermath of the Ukraine-Russia conflict. We really need to also have a global perspective on how can we make sure that there is the restrictions are not going to lead to really sharp increases of prices, or even the product not being available, medicines not being available, food not being available. And this is the classic discussion we've been having about export and import restrictions, because in the debate in the pandemic with medicine and food, I think the agreement is that we must countries have the need to respond to their own emergency, but if they are going to impose export or import restrictions, it should be transparent, measured, and time bound. Can we really actually implement things like that? And how can we have distribute vaccine production? This is one of the big issues that we are also working with IFC as well as with the multilateral task force. And that requires you to, I think regional hubs is the answer, but you need to also have investment in technology and R&D and making sure that the countries that get picked to be the regional hub can be actually manufacturing these vaccines or medical supplies. So these are, I think, some of the issues that also will help to have a more trade being part of inclusiveness. And just a final point, because I think our friend from Bangladesh raised it, and I know my own friends who are in the textile business raised it, breaking of contracts, during the pandemic, the buyers just broke all their contracts. Is there anything we can do to that? You had a positive story that the buyers were, supporting their suppliers, but there was also this other side where the buyers were just not paying or just breaking contracts and said, sorry, orders dried up, sorry. So they all had to lay off. They had to either repurpose, like they ended up making PPE to keep their workers and so on. But, is there a policy there? And, I know IFC also has a role to play. Susan mentioned it, to provide, liquidity, trade financing, especially for the SMEs. So these are just some of the global things that could be done, should be done to ensure that we have trade not just be part of the recovery, but also be inclusive. Thank you.
Thank you very much, Mari. Very important points that you raised, and really not easy solutions. We are good to think about solutions when a crisis happens, and we think about the solutions for that particular crisis, but then how can we build global value chains that are more resilient to any crisis, and taking into account some of the issues that Chad raised regarding not only essential products and also what you raised, Mari, essential products like medical supplies and food, but also strategic products like the electronic chips and so on. So Chad, I'm coming back to you with this question. So just to give you a heads up. So Susan, from the IFC perspective and the private sector perspectives again, where do you see opportunities for emerging markets and developing economies in the longer term as the global value chains start evolving and start shifting?
Well, I think that there is a lot of opportunity. The pandemic in some ways accelerated and amplified trends that were already underway. So this issue of diversification of supply chains and value chains was already happening because of natural disasters, because of politics and tariffs going up, because of companies starting to realize that there were critical bottlenecks. So work that we did at the McKinsey Global Institute identified hundreds of products for which 80 to 90% of exports came from just one country. And this includes things like the lithography machines that make semiconductors come from the Netherlands, to even minor inputs. But one of the things we learned at the early days of COVID is that it doesn't matter if an input is minor or major or high value or low value. If you don't have a certain input, you can't make the final product. And still today, 2 years later, we're seeing this. So we can see a lot of opportunity for a more diverse set of emerging and developing economies to participate in value chains, I think, in the years ahead. So in consumer electronics, you're seeing a lot of foreign direct investment going into India, for instance, to produce smartphones. Indonesia in textiles and apparel, you've seen big movements where China had been the very dominant exporter, and now you're seeing very rapid growth in Vietnam and Bangladesh and India. Second big opportunity, I think, is in this idea of nearshoring, or I'm going to call it regional trade. So since about 2017, the share of global trade that occurred within a region, as opposed to between two regions, was growing faster. So we had seen a regionalization of trade networks, and this reflects a lot of different factors. It reflects different wage rates around the world, higher transportation costs, the benefits of knowing your suppliers, as Chad pointed out. It's very hard, and most large companies don't really know beyond their direct suppliers who their suppliers are. So by having a supply chain that's somewhat closer to the end consumer market, you can get products to market faster, responding to changes in consumer demand, and you can also get to know your suppliers better. So this, I think, will continue to be a big opportunity. Sometimes it is about supplying the large end consumer market. So Turkey and Morocco, for instance, producing for Europe. Mexico, Central America, and Latin America producing for the US, and Southeast Asia producing for the Chinese market. So we're making a lot of investments in the export sector of companies around the world in that regard. But I think there's also now different regional trade imperatives. So the Africa Continental Free Trade Agreement is really historic, and Africa is a continent that has the lowest share of regional trade of any region in the world. So they are more heavily trading with the rest of the world than with each other. And it will take time for regulation to be harmonized, for customs and tariffs to be eased, for transportation and logistics networks to be brought up to speed. But there's a big opportunity, I think, for trading with each other. And then, of course, that finally extends to medical supplies and vaccines, as we've talked about. I think one of the most remarkable changes in the long term is going to be the fact that we're talking about very sophisticated products like the mRNA vaccines now being produced in South Africa. Senegal is working on producing an mRNA vaccine. Rwanda is interested. 2 years ago, nobody was thinking about that. We have sort of a model of development in our minds, like the East Asian model, where you start with the simpler low value goods like textiles and apparel, and then slowly you move up the supply chain, and maybe in 2 decades you'll get to life sciences, pharmaceuticals, et cetera. And the pandemic has really changed that, now creating regional opportunities for countries around the world. So I think overall, as we look ahead, there is a lot of turmoil and uncertainty. We're still seeing the logistics snarls. But beyond that, I do think that there will be another wave of global value chains, and countries that didn't necessarily participate heavily in the first wave of globalization over the last 20 years will have new opportunities looking ahead.
That's great, Susan, and very optimistic for developing countries. And I agree, we need to look at the new wave of global value chains beyond what was successful in the past in terms of apparel, for example, or electronics. There will be new global value chains that will mean a lot for our developing countries. Thank you. Chad, I want to actually dig a little deeper on the question you yourself raised, which I think is a very, very important question. So if we look at just comparative advantage globally, it might lead us to a concentration of production or certain important strategic products in few countries. And that's really what normally we preach, just follow comparative advantage. But then now we realize that this is not always beneficial. And therefore, how do you regulate that? Who should regulate that? Whether it is for strategic products like microchips, or whether it is for essential products like vaccine and medical products. Where do we stop? Where do we begin? Who does it? And how do you ensure that it does not become a protectionist measure?
So thank you, Mona. That is exactly the question I think we need to be struggling with. And I'm not going to pretend that there's a silver bullet, but I think it's important to recognize that that's kind of fundamentally what we're dealing with. I think there's a multitude of ways to approach it, and probably it is, each is contingent on what supply chain and products you're talking about. So if you're thinking about PPE, for example, a lot of the problem can be dealt with by stockpiling, inventories, and management, and sort of the regulation of that, right? Which is, we haven't typically engaged in, at least in richer countries. It was very much just in time, let the market deal with things, but that didn't work. Trade, when I look at the data, trade and PPE ultimately played a huge role in benefiting richer countries, getting access to imports from countries like China, but it came too late. The problem was this happened in, starting from April, May of 2020, and not in March when it was really needed. And so that's not China's fault. This is just sort of the geographic concentration of how the pandemic played out. Stockpiling can be one way to help get you through until you can engage the engine of trade. But for other areas that are sort of new industries, say, I'm not sure that's obvious. You can't stockpile vaccines for the next pandemic, right? Because we haven't invented them yet. We can't stockpile the most innovative semiconductors because those are at the frontier. So what do we do there? Well, we're starting to see some innovative policy proposals, and I think Susan has mentioned some of them by seeking to diversify production of some of the mRNA vaccines across the world. That's a good step. But even when we're seeing things coming out of the United States in Europe on industrial policy and semiconductors, for example, and again, this is a very different story from PPE, right? We're trying to move some of the production of the highest end stuff out of very fancy places like Taiwan and South Korea. So this is a very, very interesting story. What they're trying to do, what the United States and Europe are doing, is each subsidized, but they're recognizing they don't want to compete with each other. So they're trying to organize their industrial policy cooperatively so that they don't go after the same firms, the same segments of the markets, et cetera. So I think you're going to start to see some sort of creative engagements like that. I know American policymakers now, when they're engaging with countries, especially in Asia, East Asia, and they can't talk about new trade agreements because politically that's unacceptable in the United States, and they're talking about supply chain resilience. What does that mean? Well, it means willingness to share information about the supply chain, willingness to abide by other sorts of policies that are not trade related, but it's corporate due diligence and corporate social responsibility if we're worried about labor conditions, environmental conditions, and sustainability, or things like when it comes to national security, these export controls. But this is going to require engaging in these supply chains. If you're developing in emerging economies, just requires a level of sophistication that is going to be, I think, demanded of them in terms of information, and then being able to act on that information when requested, that we haven't seen previously. And this is going to be very, very different than in the past.
Thank you very much, Chad. And I think this is a long conversation that we will have to continue. This is the new way of thinking. And as you said, there's a lot of thinking to do, and we haven't figured it out yet. Shakib, last question to you. I know we're running out of time, so I hope we can close in a minute or so. So Shakib, what is the climate change, or how is climate change affecting firms in Bangladesh? Bangladesh is clearly vulnerable to climate change. So how is it affecting firms in your country and their participation in GVCs?
Well, things are not very clear to the enterprises and policymakers yet, but I can give you some examples, real life examples. In the southern part of the country, where salinity is a problem and it's increasing day by day, they cannot set up any denim plant or textile washing plant because they need a lot of fresh water, sweet water, and they cannot use the saline water without a very expensive desalination unit. So that puts the geographic limitation about setting up an industry. So that is one example. And there could be some tendency for shifting away from manufacturing to service industry, and in some cases, some high value agriculture, like horticulture. So because quick payoff, instead of setting up a large manufacturing unit, which the payback period is like 20 years, 15 years. So some entrepreneurs may switch from manufacturing to service and even high value agriculture. So that's about it. And we need to also consider that climate dimension not necessarily focuses only on the carbon emission or but it also involves efficient use of water and other natural resources. So when we make policies or make projects, we need to keep everything in mind, which is very complex, I believe, not my domain. Thank you.
Thank you very much, Shakib. So thank you really all the panelists for your time and insights. I know we have been over time, but we have raised some, the panelists have raised some really important issues, such as what is the new wave of GVCs going to look like? What can we do to help the private sector know their suppliers better? Not the first supplier, but the whole chain of suppliers. What complementary policies we need to put in place to ensure that the GVCs are inclusive? And then how do we manage strategic products in times of crisis, but managing them in advance so that we don't come up with bad policies under pressure. So thank you all again for your presence. Thanks to all the panelists, Mari, Susan, Chad, and Shakib, and thanks for Paul and Marila for their wonderful presentation.